Good morning, everyone. Thank you for joining us on this pleasant Saturday morning. My name is Dhruti Shah, and I'm pleased to welcome you to this webinar on Liberalized Remittance Scheme, also known as LRS, organized by Affluence Advisory. The Liberalized Remittance Scheme (LRS) was first introduced by Reserve Bank of India in 2004 to enable resident individuals to remit foreign exchange abroad for certain permissible purposes without seeking prior RBI approval. In this webinar, we shall be discussing on the history of LRS, current account transactions, capital account transactions, prohibited transactions, common mistakes, tax, FAQs, and interesting case studies on the subject. We're glad to have the panelists and experts who will be sharing their valuable insights on the topic. However, before I introduce you to the panelists, let's just know a little about Affluence Advisory. Affluence Advisory, an ISO 9001 certified firm, is a multidisciplinary firm established with a vision to provide one-stop solution to clients under the dynamic and complex business environment. The Affluence Advisory team, which includes chartered accountants, company secretaries, corporate lawyers, management graduates, and other seasoned professionals, are committed to deliver quality services and assistance to its clients for more than 2 decades now. Now, with great pleasure, I would like to introduce our panelists for this season. To begin with, we have with us Mr. Ashish Sodani, partner at Parakram Legal. He's a seasoned FEMA specialist and international tax lawyer with over 12 years of experience. Widely recognized for his deep expertise in cross border transactions, international tax structuring, and tax litigation. He serves as a trusted advisor to clients on both inbound and outbound investments, tax structuring, and disputes, as well as wealth and succession planning for private clients. He has also appeared in several high profile cases before the Supreme Court of India, high courts, and tribunals, particularly involving indirect tax transfer pricing, and other complex international tax issues. His FEMA practice is equally comprehensive, advising on the latest overseas direct investment ODI regulations, the LRS scheme, foreign direct investment, and import-export compliance, while also representing clients in compounding proceedings. We welcome you, Ashish, sir. Moving forward to another panelist, Swarnima Raghuvanshi. She's the business head in cross-border remittances, Kotak Mahindra Bank. With 13 years of experience in cross-border remittances and strong banking background, and holds expertise in developing and managing remittance products, foreign strategic partnerships, and driving innovation across global payment corridors. Recognized for delivering secure, compliant, and scalable payment solutions, she has enabled businesses to confidently expand their global reach and simplify complex international transactions. We welcome this Purnima ma'am. Also, we have with us, sorry, yeah. Also, we have with us Mr. Paresh Buddhadev. He's a senior associate at Affluence Advisory. He's a distinguished expert in financial structuring, tax, legal, and regulatory advisory services. With extensive experience as an ex-partner at Chicle and Associates, Paresh Buddhadev has uniquely positioned himself to offer clients a seamless convergence of these disciplines, particularly in complex M&A transactions, corporate restructuring, joint ventures, and more. His value proposition is centered around providing single point accountability and end to end ownership of structuring, tax, legal, and regulatory advice, eliminating the need for clients to engage multiple top tier firms. We welcome you, Paresh, sir. Lastly, we have with us Mr. Bhavesh Chedda, a practicing company secretary who heads the compliance department at Affluence Advisory. With 10 plus years of experience, he has developed deep expertise in the areas of listing compliances, SME and mainboard IPO, FEMA, preferential issues, capital structuring in listed companies, ESOP, and M&A, just a few among the many. We welcome you, Bhavesh, sir. Now let's begin with the session, and I request Paresh sir to share his insights on the history and introduction on LRS. Over to you, Paresh, sir. Good morning, everyone.
When LRS was introduced in 2004 with a $25,000 limit at that point of time, there were absolutely no restrictions for repatriation back, end use requirement, nothing absolutely you could use the money, give it to anybody, and no questions were to be asked. This was the background under which LRS was introduced. Unfortunately, over the period of time, RBI from time to time has come back with restriction on bringing back the money in 180 days, if not used. RBI again coming back and saying that if you are investing in an SPV or a foreign company, you comply with the ODI regulations. No such restrictions were put at the time when the LRS was introduced. The LRS limits also went on increasing from 25 to 50,000, 50,000 to 2 lakh, and from $2 lakh, it was again reduced to $1,25,000 suddenly in 2013 and was restored in 2015 to 250, but with current account transactions being included. So effectively, you reduce the limit from 2 lakh, which was there prior to 2013, to back to by including current account transactions. Current account transactions were independently to be allowed outside the $2 lakh limit. So it's completely a sea change which RBI made from time to time. And this is all based on certain officers thinking that, this scheme is being misused. The basic, when you change this limits suddenly, people do not know how to carry on existing transactions or have entered into transactions based on certain understanding. RBI took a view suddenly that, any deferred payment will amount to a liability and therefore requires prior approval and doesn't, you cannot be sure that LRS is available to you permanently. RBI officially on public platforms suddenly started announcing LRS cannot be taken for granted. A scheme which was announced with a liberalized intent by the government, suddenly RBI started meddling with it at every point of time. Way they meddled with it, they said you cannot float an investment company. Now you cannot float an investment company to invest, say, in a Singapore company, and from Singapore company investing in shares in US stock exchange. So those or retrospectively, those cases where people went in for compounding, the compounding penalty levied were obnoxiously high, saying 50% of your profit is to be taken away. Because you have earned excess profits using a SPV structure. How can an excess profit arise is a matter of doubt, because if I invest directly or whether I invest through an SPV, the money is same. I'll make same profits. But RBI just took a ad hoc view in the compounding order saying that this will be subject to compounding at a steep rate. This whole LRS ODI concept was brought in only in 2013, but applied retroactively from 2004 problem in most cases. So RBI has been really unhappy with what was done by the government. If it's a government policy on a foreign exchange matter, whether RBI should have stepped in and changed the regulations unilaterally is a question which needs to be added to. Whether it wants $250,000, it wants 2 lakh, or it wants $150,000. That's a question left open to the RBI's discretion. But once you do a limit, don't put 100 restrictions, make people comply with 100 rules and regulations after that. If you say liberalize, the word started with liberalized remittance scheme. What is liberalized in it? Everything you put a restriction and then say you will do this, you will not, you will bring back the money in 180 days, create a confusion, and then say that you can invest in listed debt, you cannot invest in unlisted debt, you can't do this, you can't do that. If you wanted to give a liberalized regime, which was the intent of the government in 2004, you have just reversed the intent which was there in 2004 completely by putting restrictions across board, and you created havoc in the market on this whole thing. Suddenly you introduce a TCS on that, agreed for reporting purpose, you wanted to introduce a reporting TCS, but a 20% TCS rate without a credit for an employee. If an employee uses $250,000 limit, virtually he has to go and claim the refund of TDS every time. What is the point in giving a refund to later on? The point was to actually ensure that it is a liberalized scheme where you want a reporting, you say 2%, 1% TDS, TCS. You will get it in information which you require. So both income tax department as well as the RBI should have told income tax that boss, this is not the intent to collect taxes, but the intent is to get reporting. People who are sending money abroad, you get the report for that. That's fair, but you cannot ask people to claim refunds of amounts which are then due, not allowing even credit against salary income. That's how the history has evolved over a period of, last 20 years for this whole LRS. LRS scheme has become a pain point than a liberalized regime, which was supposed to be. It was announced as a liberalized regime by the RBI governor. Prime Minister, Finance Minister, then Finance Minister, in the budget speech announced it as a liberalized scheme, and then there is sudden U-turn which is taken by RBI. Individual officers of RBI who felt certain misuses were, they just felt misuses were happening on their individual perception. They just stopped this liberalization. I think so that as a history should.
Right, sir.
It
Thank you.
covers almost everything which
Right.
happened in this. So probably the part of the capital account restrictions and all that was already covered in the history.
Right, sir. Let's just deep dive further into the capital and the current account transactions. Over to you, Ashish, sir, with the capital account transactions now.
Sure. Thanks, Sudhi. Thanks, Parisar. Should we put up the presentation also? Maybe that'll give some people some idea. Thanks, Rakesh. So on the capital account transactions, I think the rule of FEMA, the way we think about it is that typically what has been allowed has been permitted under the capital account transactions. So whatever is not provided for in the capital account transactions is really not allowed, and you will require RBI approval unless it has been specifically mentioned. From an LRS perspective, what becomes relevant is that under LRS, both capital and current account transactions have been permitted, and some of the capital account transactions that have been permitted under LRS is one, opening of a foreign currency bank account. Rakesh, you want to go to the next slide? Yeah. Opening of foreign currency bank accounts is something that is permitted under the LRS regulations, which does not require RBI approval. Similarly, acquisition of immovable property abroad also has been permitted under the LRS. This is, of course, subject to how the Overseas Investment Rules 2022 talk about them. These rules these rules have come after the Overseas Direct Investment rules and regulations, and acquisition of immovable property has been provided for in these rules. And while the limit of $250,000 remains, the mechanism, etc., to acquire immovable property has been provided for in these rules. Similarly, under the Overseas Investment Framework, an individual can also acquire or set up a company or a joint venture or a company or a joint venture abroad, and this is also done basis the overseas investment rules and regulations. Some of the things that one should keep in mind when setting up a company abroad is that that company should not be in financial services and should not have a step-down subsidiary. So if you are setting up a wholly owned subsidiary, then these are the two conditions that have to be met, without which you will not be able to set up a foreign company outside India. Likewise, in case of listed shares, debt instruments, mutual funds, AIFs, LRS has been permitted up to the $250,000 limit. These are considered to be portfolio investments. Unlike what was earlier, in the earlier law, basically there was no meaning or definition of what does a portfolio investment mean, which basically meant that each bank was taking a separate view. Somebody was saying that less than 5% is portfolio investment. Somebody was saying that less than 10% is portfolio investment. But with the current law in place, portfolio investments has been clearly defined. And, what will fall within the portfolio investment route has been provided for, and therefore you can use your LRS monies accordingly. Uh, the last bit on capital account transaction that I want to quickly touch upon is basically extension of a loan to an NRI or a PIO relative. Now, an individual can give a loan to his NRI relative abroad, provided the following conditions are met. One of them being that the loan should be interest-free. It should have a minimum 1 year maturity, which means the loan repayment needs to take place after the period of 1 year is over. Also, the NRI can either use the loan for its own purposes or he can use it for his business in India. This is a very important criteria that just because the money has gone abroad does not mean that he can use it for the purposes of business outside India. It has to be used within India. Of course, while the loan is being used for business, it cannot still be used for real estate business, Nidhi company, chit funds, or agricultural plantation, or for trading in transferable development rights. Uh, Also, the loan amount should be credited into the NRO PIO's NRO account, and the repayment has to take place from either one of the NRO EFC foreign currency account of the non-resident and coming back to the resident. So this is broadly what the permissible capital account transactions are under LRS, and within the $250,000 limit, these are all that you can do without taking RBI approval and subject to OI regulations and rules in terms of setting up companies and acquiring immovable property. Over to you, Dhruti.
Transactions, we now move to current account transactions. Over to you, Swarnima ma'am.
Okay, hi. So basically, current account transactions, they encompasses day-to-day financial activities like your trade services, and your personal needs. So anything that does not alter, a customer's asset or liability abroad, all that activities encompasses your current account transactions. So few examples to say for like private visits. So anyone who wants to go abroad for their personal requirement for travel, they can do remittances under current account. Then tour and operators who book tickets and hotels bookings for international travels, all that comes under current account transactions. Business travel is another, if a corporate is sending an employee abroad for work, that also falls under current account. Then you have education abroad. So any student who is pursuing education outside India and have to pay their tuition fees, or probably their day-to-day expenses needs to be met. So such remittances are all part of your current account. Then you have your medical treatments and your gifting. Somebody wants to gift someone abroad, that can also be that is also a part of current account transaction. So there are many current account transactions, like you can see on the slide itself. Employment is there, immigration is there, visa fees payments are all. So like all day-to-day activities, personal needs, travel, leisure, all that falls under current account transactions. Yeah. So just let's get into a detailing on what each and every purpose says. So like we have spoken on the history of LRS, and then we spoke about capital account transactions. Similarly, under current account transaction, every purpose has a certain meaning, and it has a definition to it. Like I explained, private visits, other than Nepal and Bhutan, any resident individual under the ambit of 250,000 USD in a financial year, can send money, or use money abroad for a visit outside India. Gift and donation, like I said. So all these purposes, are all under the ambit of 250,000 USD. You can split your money as per your requirement. Accordingly, you can send money abroad. Yeah. Okay. Now there is a purpose called, family maintenance. That is for any student, or anyone who is living abroad, and their day-to-day expenses needs to be met. So that purpose is used. Family maintenance is a purpose where usually you have to define your relationship. So mother, father, son, including wife or daughter, including husband, brother, stepsister, only these defined relationships, can actually send money outside India under family maintenance. If you have an aunt who wants to, send you money abroad for any reason, maybe it's a birthday or an anniversary, for that matter, your gift as a purpose comes in. So the reason why you're sending money are defined very categorically under current and capital account transactions. So you have to choose your purpose and accordingly, remit the money outside India. Then immigration is another purpose, who is wanting to emigrate outside India probably and want to send money to their account, foreign account, can use this as a purpose to send money outside. Can we go to the next slide? Yeah. So medical treatment, like I said, somebody who is taking up a treatment outside India can use this as a purpose for, giving, like your treatment can be done or by transferring money from your Indian account abroad. So RBI has given a leeway for medical treatment and education abroad where you can actually go beyond the threshold of 2,50,000 USD. So these are the two purposes where you can go to your bank. We call it authorized dealer 81, where you can request that your requirement is beyond 2,50,000 USD, where banks would take up your request and can extend your, LRS limits for these two purposes. Can we go to the next slide? Yeah. So, like we discussed on what type of transactions falls under current account, then probably what are not part of LRS, transactions which are prohibited under LRS. So, any kind of a lottery winnings are not permitted under LRS. Then you have, any kind of income that you have incurred through a racing, riding, gambling for that matter is not permitted. Then, a callback service from your telephone agents, those kind of transactions are again not allowed. If a NRI is holding a special rupee account for business income and if he's generating any kind of interest, that is also not repatriable. Your foreign currency convertible bonds, which are issued. So those kind of transactions are prohibited. Then under LRS, we have an FATF countries list. There are some 40 members to it who look after, monitor the money laundering kind of activities. So countries listed in those are also, you cannot send money in those countries. Then gifting of a resident Indian to another resident Indian holding an account abroad, such kind of transactions or activities for that matter are prohibited under LRS. So these are the restrictions where you cannot send money for these various purposes outside India. Over to you, Dhruti.
Yes, we'll now cover the tax aspects of
Sure.
LRS.
Yeah, sure. So I think from a TCS perspective, uh, what has happened is that the government, like Paresh sir mentioned, wants to track the amounts that are going out under the LRS scheme, and for that purposes, it has come up with a TCS, which means any money that is going outside India, depending on the amounts that are going outside India, there has to be a tax collected at source. Now, if the money is being paid towards education purposes, uh, and if this amount has been taken as a loan from a specified institution, then the government understands that this LRS money is basically being paid for, is being transferred for the purpose of repaying this loan, and therefore to that extent there is no TCS that has been applicable on these kinds of remittances. However, if the payment is being made for the purposes of education, which is not covered as part of a loan that has been taken from a financial institution, or is being made for purposes of medical treatment, there is an exemption again available up to 10 lakh rupees, but above 10 lakh rupees, this has become a TCS of 5% is applicable. And the TCS has to be collected by the AD banker, and the balance monies are then paid to the relevant institution or hospital, wherever, whichever. For any other purposes under LRS, the same rule applies. When it is up to 10 lakh rupee, there is no requirement of a TCS. But the moment it goes beyond that, this amount will go to 20%. So, if you are going outside India for tourism, etc., and the amount that you are renting abroad is more than 10 lakh rupees, then this goes to about 20%. This is relevant in the context of an individual. So what we should understand is that since the limit per individual is $250,000, and if one individual is remitting more than 10 lakh rupees for any other purposes under LRS except for medical treatment and education, then the amount goes up to 20%. So if you are going to be going for a holiday and you want to remit, four people want to remit money, so that money can be divided such that one of them does not increase, goes beyond 10 lakh rupees, so that the TCS rate is also not applicable on that amount, because the remittance is being made by four different people. That's about it on TCS. I think nothing further from me, Dhruti, on TCS. Should we move on to case studies, or if anything else somebody has to add on panelist fund?
No, so very well explained about the tax aspect. I think later we can take questions if the audience has any. And we can now move on to the next segment, that is case studies. We'll be discussing case studies followed by some questionnaire answers from our end, and then we can take up the audience questions.
So I think the first case study that we'd like to talk about is that so there was this individual person A who had acquired shares of an offshore company X Limited. The person acquired 33% stake, and when he went to file his forms under the OI regulations, and this happened all after 2022, after the OI regulations came into place. So when he went to file his forms under OI regulations, the AD bank told him that you are just required to submit a form A2 and provide some other declarations. And this individual went ahead and did this. The remittance was allowed. The company became in his name. He was given the share certificates. Share registers were changed. Now, 2 years later, there was some restructuring that was required, which meant that the company which he got shares of 33% wanted to set up an Indian subsidiary. Now, if we go back to the capital account transaction that we were talking about, one of the conditions that I mentioned was that an individual wanting to set up a wholly owned subsidiary or a joint venture cannot have a step down subsidiary. And in this case, what is required was that this person, that the foreign company wanted to set up an Indian subsidiary. So I think there were two problems to be dealt with, right? The first one was the investment was made as an OPI because he was not required to file any other forms. Typically, when you are making an investment of more than 10%, which is considered to be control under the OI regulations, you are supposed to file the form FC and other documentation with the banker in order for the remittance to be made. Now, in this case, he did not file any of this because he was required to file only A2 as provided to him by his banker. Now, this led to the first problem that his reporting of the transaction was incorrect. It was an overseas direct investment, but the reporting was made as an OPI. That was step one, and that had to be, of course, taken care of. Now, step two was that because he was an individual, he cannot set up a foreign company or acquire share of a foreign company in which he has control, which has a step down subsidiary. To solve for this problem, he would have to transfer his share in the foreign company into an Indian entity. But before we could have done step two, we wanted to go ahead and solve for step one. Now, in the process of step one, what happened was that we went to the banker, and the banker said, now you need to submit all the documents that you would have otherwise submitted if you were making the remittance 2 years ago. So we provided all of these documents, including the form FC, the valuation report, all sorts of declarations that the banker requires. And once we provided them all of this, they went to RBI. It was a long process of about 3 or 4 months. They told RBI what the issue was, and RBI came back and said that, let's issue the UIN to this individual for the foreign company investment that he has made. pursuant to which he was required to then file the APRs because 2 years had passed. So the annual performance reports were then filed with the AD banker. Once they were processed, everything was regularized, then only we were allowed to make the transfer from the individual into an Indian entity, which then allowed the foreign company to set up a foreign Indian subsidiary. So this is one transaction that I thought we should speak about because it is very important that one, we understand what kind of investment we are making outside India. And while LRS does allow for capital account transactions, which include setting up a company, but it has to be read in consonance with the OI regulations, without which, if you make an error like this, it could lead to more than the amount of money that was spent. I think the time consumed was enormous, which delayed the foreign company to set up the Indian subsidiary, because that would again result in another violation. Yeah, so this is my case study, Shruti. If anything further, please let me know.
Yeah, I think we can take up the next case studies also.
Sure.
Sure.
Sure. So I think this is another case study with respect to LRS. Now, in this, Mr. X, who is an Indian resident, entered into an agreement with a foreign real estate company to purchase a completed house abroad. The builder offered a scheme where you have to make the payment of for the house over a period of 5 years post possession, without routing it through any bank in India. Which basically meant that for every year you had to pay the money under LRS, and then you would have to pay it to the builder, right? Now, what happened here effectively was that this is like a loan that was given by the builder to the individual, saying that you could make the EMI, if I may put it that way, EMI for the house in 5 years. Uh, the first question that comes to our mind is, while you can definitely remit $250,000 abroad, but does this kind of a acquisition of a house amount to you being able to purchase the house? See, the answer to this is no, because what is happening here is that, and like I mentioned in my slide, that capital account transactions, unless permitted, are prohibited. In this situation, this individual went ahead and took a so-called loan from the builder, and then he had to repay this loan. This resulted in his balance sheet outside India also being changed, right? There is a liability sitting on him outside India. Now, this is squarely not permitted under the capital account transactions, and LRS also does not specifically permit it. Therefore, taking a loan like this and then trying to pay it through the LRS was strictly prohibited, and this is something that is not allowed. So this is what the conclusion is, and that deferred payments for property abroad, where payment is made after possessions, are considered external borrowings and are not permitted under the LRS. And therefore, whenever an Indian resident wants to make a purchase of a overseas property, it must be made in compliance with the LRS norms. While $250,000 may seem like a small amount in terms of buying something outside India, but unfortunately, you will need to structure your transaction such that it does not amount to a loan for you abroad. We'll take the next one. Right. Now, Ms. Ananya, a resident individual, remitted $100,000 under the LRS scheme to invest in shares of a listed company in the US. A year later, she earned $5,000 as dividend income and sold a portion of her shares, earning $20,000 as capital gains. So therefore, in total, she made income of $25,000. Out of this, she decided to invest about $10,000 in new shares, which was like a reinvestment for the money that she had earned, and the balance 15,000 were kept in her foreign bank account. Now, under Regulation 7 of the Realization, Repatriation, and Surrender of Foreign Exchange Regulations, Anya can definitely retain or reinvest the income earned from her investment. But the unspent amount of $15,000 that she did not reinvest have to be brought back to India within 180 days or from the date that she receives it. This has been provided for under the LRS regulations, and this is something that has to be complied with. So at this point, I'd like to understand from Swarnima that, when we are talking about investing this money, what all does it come within? I mean, can open if we have an FD for the $15,000, will that amount to reinvestment, or will that not amount to reinvestment? What are the avenues basically an individual can take to reinvest this $15,000?
Swarnima ma'am, your take on this?
Sorry, Ashish, can you just repeat your question?
Sure. So, Swarnima, in this case, basically $15,000 have been kept back in the bank account. As per LRS regulations, this $15,000 need to be repatriated back to India within 180 days if they are not reinvested. So, what would you define as reinvestment to be? Can we consider making an FD of this amount to be reinvestment, or is it not permitted and we have to do some other kind of reinvestment? Any thoughts around that?
Repatriation is allowed, like 180 days, that entire tenure that is defined is like if you have invested and the money is unused, deposited in your foreign account and is not being invested further, then it has to be repatriated, or you can transfer that money into another account also. So
All right.
you can reinvest, or you can repatriate, or through an NR channel, and
Sure.
also you can transfer the money to another account.
Okay, and when you say reinvest, can I open an FD and keep the money there, or that is not permitted as
Foreign
reinvest?
currency account can be opened by a resident individual.
Okay, sure. Thank you. Moving on to our third case study. Yes. Rahul, an Indian resident, is preparing to go abroad for higher education. Before leaving India, he permits certain funds under the LRS to his foreign bank account to cover his tuition, accommodation, and other expenses. Rahul remits the funds while still a resident in India. However, he's scheduled to leave India in a few weeks later. At the time of remittance, he is required under LRS to use or repatriate any unused funds within 180 days. Once Rahul leaves India for the purposes of education, he is considered to be a non-resident enough FMR from the date of departure. Now, in this situation, what has happened is that while he has sent the money, and he is now going to become a non-resident because he's going to go for the purpose of education. His intent is to remain outside India, and therefore he's going to become a non-resident. Now, the question is whether this 180 days is still going to be a limit that he has to adhere to, or can he keep the money without reinvesting it or without bringing it back into India in his foreign bank account? So the moment he becomes a non-resident, and once his intent is clear that, I'm going for education and I'm not certain of coming back to India, and the moment this happens, then, he's become a non-resident. The bank account in which he has kept the money is also going to be considered to be a non-resident bank account, and therefore he's going to keep the monies within his foreign bank account without bringing them back into India. I think these are the case studies that we thought we'll bring to you to give you some more perspective on LRS and what kind of situations are we seeing in the practical sense. Tuti, over to you. I think these are all the case studies that we have.
Thank you, Ashish sir. Thank you so much for your insights. I think we'll now move to some FAQs that we think we were relevant and we've just brought it up. We'll put it across to for you to answer, any one of you, and then we'll take up the questions from the attendees.
Yeah, one important thing which one needs to consider while investing, especially in countries which have estate duty, one should look at, what is the estate duty risk which one is carrying on. People in India may forget that there is estate duty because we don't have estate duty from 1985. But one should be very careful when investing in country like US. The individual could suffer a estate duty where entire 40% of his investment can be a haircut. It's very exciting to think about it because RBI doesn't allow indirect investment through a holding company in a tax-friendly jurisdiction.
Right, so a very good point raised by you.
And most of our HNI cases, we came back to that conclusion that we should invest in a mutual fund in a Cayman Island or a British Virgin Island, but we should not invest directly in US stocks. That was the conclusion which happened when we were looking at it. Similarly, in the first example, first illustration case study, it talks about after the possession. Even before the possession, you cannot book a under construction flat where the consideration is payable. That itself will create a liability, and that is another area which one has to be very careful about. Because once I sign an agreement, I agree to pay some money in a future date. And RBI views that also as a creation of liability and therefore not permitted. It's very usual to book a flat, under construction flat.
Right, sir. Thank you so much, Paresh, sir. These things will surely be kept in mind. Moving forward, there are a few questions now from the attendees. Coming to the first question, wherein an attendee is asking to explain the process of investment by an Indian towards real estate. Ashish, sir, would you like to put your inputs
Sure.
for?
Yeah, sure. So, under the LRS master directions, what has been provided is that immovable property can be acquired subject to the overseas investment rules and regulations. Now, if you look at the overseas investment rules, there are restrictions with respect to acquisition or transfer of immovable property. Since we are talking about acquisition, I think the first thing that I'd like to mention is that you can acquire property as an individual up to the limit of $250,000. Now, the moment you want to go beyond that, you can consolidate it with respect to your relatives. But in that situation, what should be understood is that the amounts cannot be clubbed, which means that if you are purchasing an immovable property with four people who are your relatives, then all of the four names should be there on the name of the property for you to be able to purchase that property. Other methods of acquiring immovable property which have been allowed under the overseas investment rules is, by way of inheritance or by way of purchase from your RFC account. You can also purchase it jointly with a relative who is a person resident outside India, or out of income from sale proceeds other than through ODI, wherein the sale proceeds have come to you by selling assets outside India. These are some methods through which you can acquire removable property under the overseas investment regulations.
Thank you, sir. Moving forward to the next question, Mr. Chirag is asked, does loan for education abroad utilize from $250,000 limit of the applicant, that is student or co-applicant parent?
So
Swarnim,
I'll take the
yeah.
question. Yeah. So yes, education loan, if it is for education abroad, will fall under the ambit of 250,000 USD dollars. However, I had mentioned for medical and education, you can still go beyond 250,000 USD, while you have to submit a request for your education to your bank from where you are transferring money to your college or institution. Plus, if it is an education loan, then you also get a waiver on TCS. But in the end, it all falls under 250,000 ambit, but you can go higher basis your requirement.
Right, ma'am. So the co-applicant, I
I
mean,
think
the parent.
the next question is whose limits does it apply? It is LRS limits only, which is 250,000 USD, which is an annual limit.
Right, ma'am. Thank you.
So, Chirag, I think what you are trying to ask is whether, LRS depends on the person who's sending the money, right? If you are sending the money, then the student $250,000 limit will be applicable. Or if your parents are sending the money, then the $250,000 limit is going to be looked at from the parents' perspective. So it depends on whose PAN and whose documentation is being submitted to the bank with respect to the $250,000 limit.
Perfect. So there's one more question asked by Bombay, that can Indian invest in real sector unlisted entity?
So at the very outset, both under FDI as well as ODI, investment into a real estate sector is prohibited by RBI. What is permitted is basically construction and development. You cannot be acquiring properties and selling them because that squarely falls within the definition of real estate sector. And therefore, Indian cannot invest in real estate sector in an unlisted entity outside India.
Perfect. So there's another question. If proposed overseas new company is a wholly owned subsidiary into financial services activity, we can't set up at all or can be done with some approvals also.
If the foreign entity is a financial services entity, as an individual under LRS, you cannot be holding a wholly owned subsidiary which is into financial services. However, if you have an Indian entity, then the overseas investment rules provide for two methods through which you can invest into a financial services entity abroad. One method is if the Indian, you can do this by way of an Indian entity. The Indian entity itself should be in financial services, and then the financial services Indian entity can invest into a foreign financial services entity. The OI rules have also further liberalized this, and now you can invest into a foreign financial services entity through an Indian entity which is not into financial services, provided that the Indian entity has a 3-year profit track record.
Thank you so much, Ashish sir, for answering that. Swarnima ma'am, if I may ask this question to you, the attendee wants to know how is it with the investment through Gift City?
Sorry, Dhruti, I didn't get your question.
Yeah, so they're asking that any carve out for investment through Gift City. Is that possible?
In Gift City, you have to, so there is, so Gift City, first of all, again, falls under the 250,000 ambit. Any customer, who has opened an account in Gift City can send money to their, account in Gift City, and that again follows the LRS ambit. For any purpose that is listed under current account or capital, money can be sent. But again, that the threshold still remains 250,000 USD. And then from that account, you can further invest wherever as per your requirement.
Okay. There's a curious question from one attendee asking that how are the film stars purchasing properties in London?
See, the only thing I'd like to add to say is that we don't know from when these film stars have been remitting money and accumulating it outside India, right? So while of course what Paresh sir has said is a way to structure these investments and you are able to then purchase the property. LRS came, like Paresh sir mentioned, in 2004. We are 21 years into this. So there are 20 years in which these people could have sent money outside India and they've all accumulated it and now went ahead and purchased those summer houses that we all want to also purchase at some point.
Ashish sir, just a question is that under LRS $250,000 is allowed. So if suppose any film star who wants to buy a house beyond $250,000, so can they take RBI approval and purchase a house?
I think that answer Swarnima has to give.
You can definitely go to RBI, but RBI doesn't really permits for any kind of investments. Like for medical and education, these are the only waiver that RBI, gives to customers as well as the bank to come and request for more than the threshold defined. Else, usually no.
So in my 30 years of experience,
nobody stops from going to RBI asking for that.
Yeah. So in my 30 years of experience, I have seen 2 times RBI giving approval, but those amounts were only $500,000 in each case.
Yeah. That's this rarest cases where RBI actually permits, else usually you get a no as an answer.
Yeah.
Okay, so Swarnima ma'am, for example, say RBI has allowed for the purpose of medical and education. So it is an auto approval or still you have to take the approval of RBI?
So Bhavesh, anytime a customer comes in with a requirement, you have to create a case for that particular customer. And then accordingly, bank takes the call. And if at all it requires RBI's intervention, then bank approaches the RBI for the approval. But as per the guidelines for these two purposes, we have a leeway where you can go beyond the threshold of 2,50,000. But it
Okay.
has to be backed up by a case so that money is not being utilized for any other reason other than the ones for which customers are asking for, which is medical and education. Yeah.
And there's no upper limit to that exceptional
There is
amount.
no upper limit to that unless you if you can justify the case, there is no limit as such.
All right. And so, Swarnima ma'am, one more question. So we have seen several people who are going, say, for a tour or something outside India. And while they are returning back, say, sometimes people bring gold, sometimes they bring iPhone or something. So investment in gold outside India and then bringing it back to India, whether that is permissible and that will be fall under LRS or how it is?
Investments in gold as such does not fall under LRS. Okay, you can still buy gold and get it through other route than LRS, like in physical form. But
Okay.
there's no such repatriation as such that is permissible.
All right. Okay. And so under LRS, is it permissible to invest under cryptocurrency or any virtual digital
No,
asset or
no,
something?
no. Cryptocurrencies are not permitted under LRS.
Oh,
RBI does not have a view on cryptocurrency as such.
okay. So any other virtual digital asset that could be permissible or any virtual digital asset is not permissible?
No virtual digital currencies are permitted under LRS.
Okay. So how does anyone can track the limit of LRS? Means, is there
Okay.
anything that is
So
there?
banks usually, so anyone, including bank who has a money changer license, they have been given an access, that's a portal from RBI, where any customer who comes with a request to send money abroad, the bank's first step while processing the transaction is to check the limit. Every institution or every bank or any kind of agent who is into money changing activities have to report all such transactions to RBI at the end of the day. So as a bank, when we do process certain transactions, we report to, that's called LRS reporting, we report to RBI. And therefore, RBI accumulates all that information and put us in a form of a platform where we go as a bank. So for any LRS transaction, PAN card is mandatory and your LRS utilization is checked against the PAN card. So every time customer comes with a request, we check the PAN card and accordingly we get an output from the RBI portal where it shows the amount utilized by that individual. And accordingly, the limit which is not utilized, bank processes the transaction.
Okay. And so, as far as we understand, LRS is allowed only for resident individual. It is not allowed for HUF, trust, companies, or etc.
Partnership,
Correct?
yes. It's only allowed for resident individuals and for foreign nationals who are here for a certain tenure.
Okay. So, resident individual will cover minors as well, right?
Yes.
So, what if in case of where the minors who are not having a PAN card, so how you will be able to track that?
Minors, okay, so for minors to do the transaction, they have to get a guarantor, which is their guardian. So the transaction happens through a guardian, but yes, you will have to have a PAN card for a minors.
Okay. So, in that case, the limit of LRS will be considered for the minor and not
Individual
for the
limit
guardian,
is,
right?
yeah, yes. Yeah. But
So
minor also
Swarnima,
has their own individual limit of 2,50,000. Like I said, limit of LRS is on the individual basis.
Ashish sir was asking something, I think.
yeah, so Swarnima, with respect to reporting of LRS, right? Uh, can there be ever a situation? I think this is one of the questions also. Can there ever be a situation where a person has uh, uh, remitted more than $250,000? And let me give you an example, right? Suppose I'm going for a holiday and I have made remittances of about $245,000, but now I want $10,000 in cash, which I want to take out for a holiday. Has it ever been, or can it ever happen that I have breached this limit and the bank comes to know of it only after I have gone for the holiday?
Yes, Ashish, that happens because today the LRS check is a manual check. Sometimes, that can be a human error where customers' transaction goes beyond 2,50,000 threshold. But RBI being RBI, they, immediately send a kind of an email to the AD bank to bring back that extra money to India, since you are not allowed to go beyond 2,50,000 threshold.
Sure. So the individual will have to be then told to bring that money
So
back.
then bank has to create a provision to bring that additional, that extra money that has gone outside India. That's bank's responsibility.
Got it.
Swarnima, one more question is that the limit of 2,50,000 is for USD. So if suppose anyone who is transferring money in any other currency, so they will have to look at the equivalent value in USD or how it is?
Equivalent in that currency. 2 lakh USD is a base denominator. And in each currency, it equivalent to 2,50,000, whatever is the value in that currency is permissible.
Okay, all right.
Yeah.
So, one more question: whether individual person who is resident in India can he give loan to a company in Singapore?
Not to a entity in Singapore, but resident can give a loan to NRI.
Okay. So, Dhruti, any other questions?
I think somebody asked on LRS reporting portal that I mentioned some time back. RBI has come up with an API as well. I think that was the question, if I read it correctly. RBI has come up with an API kind of a solution for LRS monitoring. It's yet under, banks are still testing it. It has not been implemented as such by any bank. And once the testing is successful, today, the LRS transactions actually takes a bit of a time because there are a lot of human interventions there, and plus the money is going outside India. Therefore, monitoring and vigilance is even more, and that rise with the banks. Therefore, manual interventions are there. Once the LRS APIs as provided by RBI will start functioning, transactions for the customers, I think that will become more seamless.
Thank you, Sonima ma'am. There's one question which has been asked, that what happens if LRS is breached by an individual, and is it just reported, or there's some penal action taken against?
They have to
So,
do the
like
compounding, if I am not wrong.
sorry.
They have to do the compounding, right? If LRS
Yeah. So
provisions are breached, then they will have to do the.
correct. So, like I had answered this question earlier, that if LRS is breached by an individual, it is the responsibility of a bank to get that money back. So, in such cases, we usually get back to the customer and request to return the money, because LRS once reported cannot be reversed. It's not like that we get the money back and that the money is reduced. If a person has done the transaction, it cannot be reversed. Then the consumption is done for the whole limit. So in such cases where it's breached, we get the money back. We liaise with the customer and request him to support. And yes, we do report such cases to RBI. Plus, RBI also keeps monitoring. In case we don't report, they send us an email or kind of a notification where they request us to report such cases.
Right, ma'am. This portal that we spoke about is extended only to AD1, or it is extended to AD2 as well?
Currently, it's going to be extended to AD1, but yes, AD2s will also be getting this. It will be consumed by all the participants in this industry.
There's one more question from attendee asking, is LRS limit applicable in case of gift to a relative? Yes, I think you've already
Absolutely.
answered that.
Absolutely. So all current account transactions, gifting is one of the purpose under current account. Yes, 2,50,000 threshold applies to this.
Swarnima ma'am, one more question is there. For example, someone who remits the money for the purpose of education. For example, say I remit a money outside India, 1 lakh USD for the purpose of education. I utilize, and later on I came to know that I could utilize only the 95,000 USD, and 5,000 USD is still left. So can I change the purpose and that remaining
You can't
5,000?
change the purpose. No. So if you have done a particular remittance, you like for that you'll have to select a purpose. Once the money is gone outside India, then you can't change the purpose.
Okay. So any unused money should be repatriated back to India.
Absolutely within 180 days. Yes.
All right. Okay. So I cannot change the purpose later on once I remit the funds.
No, no.
But can
Because
I
that
invest
becomes
that
the
money?
transaction cycle ends. So then if you need to do a repatriation, that becomes another transaction for us. And
Oh,
therefore another purpose is required.
So the
Ashish.
5,000 that remains, I can use it for any other purpose. Would that be a problem? Just because I've written the purpose code to be education, does it mean that I have to use the full $1 lakh in Bhavesh's example?
That lies with the customer's hand, because RBI has not given us any kind of mandate that once the money reaches to a foreign account, where is it being
How will
used,
it
and no
go?
bank can track it.
Absolutely. Absolutely.
Yeah. So how you will be able to track that it is used for education purpose only?
So for that, I have a purpose. See, as a bank, as an AD, I need to ensure if the money is going for education, I may take certain documents which justifies the purpose. After that, money has gone. So I'll just give an example that under education, RBI has given us quite a few purposes. Okay. And every bank or AD2, they do their own due diligence, because due diligence lies with the bank. It is our responsibility to ensure as a bank that the money is going for education. So if a customer comes to us and says, I want to send money to an institution, I do see that the beneficiary is a college or university. Therefore, no questions asked, and we do allow the transactions to happen. But if a customer comes and says, I want to send money abroad under education as a purpose, but the money is going to an individual. Okay. Therefore, we as a bank ask questions and we ask documents, for example, because it's an individual, like you said, it can be used as a gifting also under education. Right. So for that, we do ask certain documents, like could be that the student is sending money to a rental apartment where the rent owner is actually taking the money into their account. So certain kind of document needs to be provided by the customer for us to place the request. Else, we do not process such transactions, and no bank will do without their due diligence.
All right. So at a time, can we have multiple purposes for the purpose of remittance? So for example, if anyone is going out for education, so they will have like a tuition fees is there, then accommodation is there, something else could be there.
Absolutely,
So
absolutely.
multiple purposes
So,
are allowed, right? And
of
for
course,
each
you
purpose,
can consume 10 purposes in a year, provided that you do not breach 250,000 USD.
okay. And for each purpose, I have to give the amount that I will be utilizing for so and so purpose, along with the proof.
Yeah, proof depends upon bank to bank, 82 to
Yeah.
82. Since their comfort, every bank, every AD, processes the transaction. Like I said, due diligence lies with the entity who is executing the transaction. Therefore, we take our due diligence. Whatever seems fit, if the transaction seems very normal, then we execute without taking any documentation. Whereas if it is a capital account transaction, I think Ashish covered, there are certain types of restrictions there. Therefore, documentations are requested. So it all depends on which purpose you're selecting and to whom the money is being sent.
All right. Sonima ma'am, there's one more curious question. The attendee's son is a UK citizen. The question is, can he transfer money to his NRE account, then transfer that to an NRO account, and then again transfer to UK without any limit? The unutilized.
That's movement of funds happening. So usually ADs would not permit that.
Right. Are there any other questions anybody wishes to ask? Probably Rakesh, so we might just let them ask directly. About the PPT, yes, it can be shared. Just drop us your email ID and we'll definitely share the PPT with you. There's one question from my end, ma'am. Now that we're talking about LRS, and I think you guys have covered it wonderfully. Just one last question. Is there any limitations pertaining to transfers to Mauritius and Pakistan?
Yes. Pakistan not allowed. Mauritius also there are limitations. Yeah. There are certain countries, we as ADs get time to time notifications basis the social economic conditions, and we get those guidelines accordingly. The banks take a call. But yes, there are restrictions. So Nepal, Bhutan, Pakistan, you can't send money like that. Pakistan, you can still, but right now, no bank is sending because of the restrained relation with Pakistan. So we got a notification from the government saying that do not allow any kind of a trade type of transactions, which did include individual as well. Yes.
Okay. Ashish sir, one question from my side with respect to the capital account transaction. So resident individuals can invest in the bonds or debentures of a foreign company?
Bonds, debentures, yes, that should be fine under
So,
capital account transaction.
okay, so do we have to see any rating or a quality of the debentures or bond or anything like that? For example, say India we see AA rating, AAA rating, etc.
Under the OI regulations, I don't think there is any prescription with respect to the rating of bond.
All right, okay, sir. Thank you.
Right, on that note, I think we'll now be closing the session since I think all the questions have been answered. And wow, like this was such an insightful session, so much needed. I hope now everybody, almost everyone, would have all the doubts cleared about LRS. And we even got to know how well the film stars are planning. So, yeah, and one note, please. Please note that the discussion we're having today is just a general discussion and it may not be applicable to any particular matter. And we strongly advise you to take professional advice before you take any action. And before we finally close, I would like to take a moment to express my sincere gratitude to our exceptional speakers. Your insights and expertise truly brought depth and meaning to this session, making it both valuable and engaging. The second gratitude is towards our dedicated organizers and behind the scenes team. Your efforts ensure honestly this webinar wouldn't have been possible without your hard work and support. Yes. And finally, to the wonderful, wonderful audience, thank you for joining us and making this webinar such a success. We're truly grateful for your presence, especially on a Saturday morning like this. Until next time, take care, stay connected, and keep following our LinkedIn page for more such valuable sessions. In case of any questions or queries which have been left unanswered or probably that later pops up, please write us on contact@affluence.net.in. Thank you again and goodbye for now. Have a great day.